Hi everyone, this is Jitendra Gupta. Today I am going to talk about HG Infra Engineering, which is slightly less known company in this space, but it's very high quality business in the construction space. Let me briefly tell you about the key investment arguments and why we like this particular stock at this point in time. First, it's run by very highly or prudent, very extremely prudent management. So if you look at, there are hardly any company in this particular space which can make operating margins in the range of 15 to 16% and earn return on equity in excess of 35%. On top of this, the company has a debt to equity of less than 0.3 times, and because the company has a very strong focus on the balance sheet, and yet it has not lost its sight on the growth without compromising on the growth. So if you look at last 5 years, the company's sales has grown at a CAGR of almost 34%, and its net profit has grown by almost 41%. So if you look, the company has not compromised on the growth, and yet it has maintained its balance sheet very prudently. Second important point is that it has a very efficient business model. The company was originally started as a subcontractor, and later on it has become as a main contractor. So today it is bidding most of its projects on the basis of as a main contractor. So what, over these years, one very important thing that has happened with the company is, as a subcontractor, it has accumulated a lot of equipment. So today, most or rather bulk of its in-house equipment requirement are met through the equipments that the company own. If you look at close to 60% of its balance sheet is employed in the fixed assets. So that reflects that the company owns most of its equipments. What it brings to on the table, in terms of the advantage is that its cost of operation is very low. It is very competitive in the market. So when it go and bid for the projects, its bids are very competitive in the market, and because of that, its project winning ratio is very high. Apart from the cost, the company has been able to execute projects. Its execution cycle is very low as compared to the peers, and it has a very strong, hold or control over the working capital of the company. And the third important point is, it has a very strong growth visibility. Today, the company is sitting on an order book of close to 6,500 crore, which is about 5 times its FY18 annual revenue. So I think that provides a very strong revenue visibility for the next 3 to 4 years as far as the revenue and earnings are concerned. What is important, recently company has raised about 300 crore through its IPO, and that money, almost 300 crore, was on top of the net worth. It was sitting on a net worth of around 175 crore. So it has a strong capital at its disposal. The company can use these resources, use this capital for faster execution, bidding for larger projects and executing larger projects. So that will improve its execution cycle. It will be able to execute larger projects in a very short span of time, and that will lead to higher growth going forward. To sum it up, it's a good investment at current market price. The stock has corrected from about 350 levels to about 275 levels currently. It is trading at 10 times if its FY20 estimated earnings, which is quite attractive considering the fact that the company is sitting on a cash. It is earning a return on equity of almost 35, core return on equity of almost 35%. It has a very minuscule debt in the books, and of course it's a strong order book. In fact, we are expecting earnings to grow at about 30-35% over the next 2-3 years. So considering all these factors, I think it's a good investment at current market price.